हमारा आज का टॉपिक है इंडियाज मैग्निफिसेंट 270। अब टॉपिक का नाम सुनते ही लगेगा ये क्या है, तो आइए जानते हैं व्हाट एग्जैक्टली इज इंडियाज मैग्निफिसेंट 270। वैसे आपने यूएस मार्केट्स के मैग्निफिसेंट 7 के बारे में तो सुना ही होगा। इट इज़ नथिंग लाइक द यूल ब्रायनर, Steve McQueen, Charles Bronson, Western flick of the same name, but about 7 high performing stocks in the US markets. The recent entrant to that list is Nvidia, but what is India's Magnificent 270 all about? हाल ही की एक रिपोर्ट में गोल्डमैन सैक ने बताया था कि पिछले 20 सालों में NSE 500 के 54% स्टॉक्स में 10% या उससे ज़्यादा की ग्रोथ हुई है, यानी 1 करोड़ का इन्वेस्टमेंट 20 साल में 10 करोड़ रुपए का हो गया। इन CAGR terms, it is about 12.3% annualized. If it does not sound flattering, but these are consistent returns over 20 years for 270 broad-based index stocks, or India's Magnificent 270. Ab, why is this performance so special? According to the Goldman Sachs report, 54% of a broad-based index giving multi-bagger returns is unprecedented among emerging markets or developed markets. The general average in a best-case scenario is that about 20 to 30% of the stocks in any market give multi-bagger returns. That is what makes the returns on these magnificent 270 so special. The report has also gone a step further to get more granular returns data. एक और दिलचस्प बात यह है कि BSE 200 के लगभग 40% स्टॉक्स ने पिछले 20 सालों में 20% से ज़्यादा का CAGR रिटर्न दिया है, जो कि फिर से कुछ ऐसा है जो कि बाकी मार्केट से मैच नहीं करता। Goldman has only focused on minimum 10 baggers, and no market produced these kind of multi-baggers as consistently as Indian markets did. Now, which stocks were the stars of last 20 years? According to the report, stocks like Westlife Food, Praj Industries, GM Financial, Phoenix Mills, KGI Industries and Balkrishna Industries have multiplied more than 200 times in this period of 20 years. The story is not just about the micros but also about the macros. For instance, the market cap of the Indian markets has grown 12-fold since 2003. Even as a dumb investment in an index fund or a random selection of reasonably well-endowed stocks would have made an investor richer many times over. Despite the massive market expansion, the buffer ratio of market cap to GDP has not gone up appreciably. For instance, if you compare the decade of 2003 to 2012 with the decade of 2013 to 2022, the buffer ratio has gone up from 76% to 87%. It means that the GDP has largely kept pace with the growth in market cap. So investors need not be overly worried about stretched valuations still. From the above data, it is apparent that Indian markets have been extremely adept at generating alpha for investors. The question is whether a passive strategy of buying and holding the index over longer periods of time would have really worked. Just look at the Sensex. पिछले 43 ईयर्स में सेंसेक्स ने डिविडेंड्स को छोड़कर 16% का एवरेज CAGR रिटर्न जनरेट किया. According to the Goldman report, nearly 60% of the BSE 200 stocks would have done better than the benchmark. Alpha or beta, both would have worked in India as long as the investor was patient enough to hang on to equities for the long term. यदि आप मंदी और बेयरिश मार्केट्स के बारे में टेंशन में हैं, तो एक बार फिर से सोचिए. According to the findings of the report, low starting valuation of multi-baggers were correlated to broad market valuations. If you look at the multi-baggers of last few years, more than 3/5 of them took off during one of the major crisis periods. It could have been the dot-com crisis of 2002, or global financial crisis of 2009, or taper tantrum of 2013, or the COVID lows of 2020. To cut a long story short, manic lows offer great entry points for multi-baggers in India. Well, we hope आज का वीडियो सेशन आपको समझ आया होगा. सब्सक्राइब करें हमारा चैनल blinkX and stay updated with more such informative content.